How's it going, Stewart?
Oh, not too bad for Friday. Can't complain. Getting ready for the weekend.
Yeah, well, thanks for joining me today. I do appreciate it. I just want to talk briefly about the metals markets and some of your indicators. We were going back and forth, you and I, the last couple of days, and we decided to do this interview today just because of the Fed meeting on Wednesday, which I thought was probably wise. And then since the Fed meeting on Wednesday, and we thought something might happen. Either we'll get a price action to the downside, buying opportunity, if you would, or we would get a good movement to the upside. And it doesn't look like either of those has happened. So just wanted to see what your initial reaction is to the Fed and where are we at right now?
Yeah, so I think, the big thing with the Fed is the stock market. All the stock market guys are watching and, we're overbought in some ways. It's, especially on the NASDAQ, which doesn't have too much breadth. Um, but, and the gold bugs generally are, not all of them, but generally aren't keen on the stock market. But this in the States where that's most of the money is focused on the stock market. It's we when does the Fed stop hiking, and everything is sort of put into this narrative that even if there are hiking, it's near the end, so there we should buy, and this continues on. um I think more for the gold market, it's just kind of we're in this summer doldrums, and you have probably another month, like it or not, um, of this action. And, one of the big charts that I focus on is the weekly gold chart. And I've tweaked the stochastics oscillator. So I've done this with a lot of the oscillators over the years, but just keeping it simple. A lot of the gold bugs are business owners and they don't have a lot of time to be looking at 10,000, little things on the chart. So, between the RSI and the stochastics, we're still up there a bit. And if you look at something like the bullish percentage, the BP GDM, we got down to 50 yesterday, which is no longer up at 70 overbought, but we're not really in that big buy zone. Now, having said that, the gold bugs that have core positions, which most do, you could still get something here, whether it's related to Ukraine or the dollar, the ECB hiked. Um, you could get something that sends gold a lot higher, but as far as a buying opportunity, the two other big things I look for is to look for buying out of India, and we're just not seeing that. A lot of recycling going on. So the jewelers are doing well there, but it's mostly recycled metal. And then on the COMEX or the CRIMEX, as some of the bugs refer to it, is the big commercial traders, which really are the banks. Um, they've been nibbling on the long side, but also you get the COT report is always, it comes out to Tuesday on a Friday, so you don't really see the end of it. But they've been kind of nibbling, but nothing outrageously, that would suggest some kind of roaring opportunity. Again, with the Fed, it's kind of, I wouldn't say it's outright bullish for gold, but it's supportive at this point. Um, and the gold bugs, aren't like the stock guys where they just, everything has to be turned into sort of a fantasy that we go ever higher. But I think that's kind of where we're at. The gold market looks, pretty well supported. Central bank buying it could taper off a bit in the second half, but it's still supportive. But we're just not at that extreme level where back up the truck and that kind of thing for buying. So that's kind of my take on it right here.
Speaking of that, what would price point would you want to see both in the miners as well as the metal to back up the truck and buy?
Well, to back up the truck, I'd be wanting to see 1800. Um, as far as kind of meaty buying, my Indian contacts are kind of looking at 1900. And again, it's setting the action, some of these, I call them the HSR zones, which are really just support zones, but based on either a round number like 1900, or a previous high or low on the weekly chart. And you've got something there at around 1900. So, I mean, that's where I would be buying. Um, Here is more of a trading opportunity, like with stop losses or small size. Even if you were aggressive, you could buy, some call options and hope, that plays out. But for the bigger buying, I'd be looking at 1900. Anyways, now that doesn't mean we're going there. It's just, and that's a lot of what I do. I think a lot of people that get in the West that get into the gold market, they're kind of looking, they get nervous about all the debt. They're looking kind of even to protect their family's wealth. And so they get into the gold and maybe into the gold stocks and the silver. But it, the timing's a little bit off. And I think rather than sort of buying based on what you think's next, you really have to look and just let price, you've got to let that sentiment, the oscillators, you need to see India buying, you need to see the banks buying, and we're not there. It doesn't mean it can't go higher, but I'm just not quite, it's not back up the trucks time here. It could be at 1900. It definitely is going to be some buying there. You're definitely going to see some buying out of India and probably some longs buying by the banks. But again, it would be more of a not quite the back. It'd be back up the Tonka truck, a little bit smaller, the pickup truck.
Right. Well, you said two things that are very interesting to me. One is more or less the seasonality, that could be a catalyst, and then India buying, I guess, and banks buying at a round number. And I found that in my trading career, and I used to run a small hedge fund, but I found that to be true no matter what the market. And a key round number, which I like that you said, um, that was usually an entry or an exit point for myself as far as trading is concerned. And I don't know why that's the case, other than people like to put buys or sells at around a big fat juicy round number. That's the only way I could chalk it up. But if I'm correct me if I'm wrong, you're not very not that you're giving advice, but you're not incredibly bullish unless we go lower, probably about 5% lower into the 1900 range for gold. And that will probably increase some negative sentiment, which is bullish, if you would. And then also the seasonality of it, we're probably a month, if not into August, out. Is that correct?
Yeah, I would say like sometime, sometime between mid-July and even into August, seasonally. Um, you're just not quite there right now. And you mentioned the round, I mean, it was the same on the upside with 2000. I mean, even going back to 2011, I mean, 1920, but we hit 2000 on some of the futures contracts.
Right.
And, we've been banking with a 2080 since the year 2020, we've been hitting, which is really the whole 2000 area. You have an overshoot through it, and a lot of investors get excited. We're breaking out, but really you're still in that whole area.
Right.
And to me, a breakout over 2000, maybe 2200, but really more up like 2400 gets you out of that huge range we've been in for since 2011, really.
Yeah.
Um, and then you've got like a full break. And then if you came back to that 2000 area. Not, we always, I always urge the investors, don't, you don't want to have it go down. You have core positions, you want your positions to go higher. But if there is, a price sale, a pullback, you definitely want it to happen from higher prices. But, if one did happen, if you got up there and then you pull back to that 2000 area, that would be another big back up the truck zone. But you have to get, not just a little pop above 2000. You've got to really clear that zone. And we saw that in 2011, we came down towards 1000, and that round number just acted like a huge, trampoline in the end. I mean, it was more of a gulag as you sat there, but it was a huge wall of support, and sentiment was so negative there. You could hardly find anybody that wasn't predicting at least, it'll dip to 800 and then go higher. But again, if you haven't prepared for those numbers ahead of time, it's very difficult when it suddenly unfolds as kind of a surprise to take action. So, this is again why a lot of what I do is getting investors, prepare for certain prices, but don't be predicting them, but just, have some capital ready to buy there. And if it plays out like that, suddenly you're there and you've prepared for it ahead of time. Whereas when you're trying to predict it higher and then it shockingly goes down, mentally it's very tough to buy, even as a professional money manager or trader. If it just kind of shocks your view you had, versus actually it's just, it's like wearing a parachute. I'm going to be prepared to buy this much here. And so I think I'm not negative on gold. And we could go higher here. It's just we don't have the catalyst that you
Right.
had. In March we had the bank. I would argue that Yellen was trying to destroy some of the crypto banks, and then suddenly you had the potential for a bank run, in all kinds of banks in the States. And within 12 hours, she'd reverse, saying, I won't bail out these banks, so I'm going to bail them out. And you got all this banking, crisis going on. But we don't really have anything like that now. The Ukraine war is still horrible, but there's nothing really shockingly new going on. The inflation is gone into a lull. Now, I do have a long-term view of interest rates that we're going way, way higher in interest rates, but I'm talking about over the coming decades, not
Right.
sort of the next 18 months or something like that. And so we had this one, it's sort of like coming out of the 60s. You had this, you had these rushes, and then you'd have a couple of years where it faded off, and then up you'd go again. And I think we're entering something like that. And we're in the lull period now. And it could be a couple of years even before another round of inflation hits. And now then, so maybe your rates are kind of stagnant where they are. Say the Fed gets it up to the, 5.5, and they kind of leave it there, or maybe there's a quarter point cut here or there. And then something else comes along, and now there's more inflation. Well, now your rates, you're coming from a higher base. And for gold, you need that, on that real fear trade side of it. Inflation is a big driver, but you need that kind of shocking inflation like we had when the Ukraine war started. And we're just not seeing anything there right now. So
Yeah.
very steady, but and sometimes that's what gold is. I talk about it as the ultimate asset, the ultimate currency. It's not a mining stock. Um, it's just stable, and yeah, you have these periods where it shoots higher, but uh, right now we just don't have those kind of catalysts.
Yeah, got it. Would you say then the same thing with the miners? Because earlier today I was just looking at a chart of the miners, and really in the past 6 to 12 months, they haven't really gone anywhere either. We had a significant
Yes.
Go ahead.
So with the miners, which are the big, most Western gold bugs are heavily involved with the miners. And, one of my caveats is that if you're going to be involved with the miners, you should love mining, not just try to outperform gold. And it's like stock market investors, that last run in the NASDAQ, a lot of people had the hotties, the ARK fund and all these tech stocks, they were going to outperform the NASDAQ index. And, with the gold stocks, okay, I'm going to buy these gold stocks and outperform bullion. Whereas my thing is more for the miners. Yeah, hold some core positions, but you really now there is, if you look at the long-term charts of like GDX versus gold, or the XAU or the Huey versus gold, there is a big what looks like a big base pattern. But it could be another couple of years before you really come out of there. But again, that kind of fits with the whole inflation long-term scenario. But in the sort of the nuts and bolts of it for the average investor, when you get down to these buy zones for gold, it really comes down to gold. And my thing is that you typically are going to see GDX rally 20%, 30% from one of these buy zones for gold. Again, where you've got these oscillators down, you're in a support zone, you've got India buying, you've got the banks buying. You're going to see gold pop $100, $200, and you're going to see GDX rally 20, 30, and depending, if you're like coming out of the head of a head and shoulders pattern, you could see like 100% move then. We saw that in late 2015 up into 2016 in 6 months. I mean, I think GDXJ was up 200 or 300%.
Mhm.
Um, but generally, and then some of the individual, as you get more out on the risk scale, you could be making 30, 40%. And it typically happens in like 4 to 8 weeks, and it
Yeah, it
is
happens
over.
really quick. Yeah, it goes really quick.
And if you don't take profits off, and now everybody's excited again, and it's all in the news, the frustrating thing with the miners is that it's happening right now. So gold got up to, from March, if you look at gold, was about 1810, call it 1800, that round number zone,
Mhm.
and we rallied up to all the way to 2080. And so my thing was selling around 1960, which is kind of a resistance zone. And now if you look at a lot of the miners, um, there, so gold pulled back to kind of 1950-ish. Now we ended up down at about 1930, but the miners are trading well below there mostly, where the equivalent of gold 1950. They're some of them have actually gone down below the March lows, which is where gold was 1800. And so that can be frustrating. And if you haven't sold anything, but you're buying for, you're sure this time we're going to break out. Um, so, my suggestion for investors is hold some core positions, but especially for any kind of new money that you want to put in the miners, you have to look at those just focus on the gold. Um, you can tweak it a little bit with what you see on the mining stock charts. Um, but after a month or two, if you've got 20, 30% gains, I mean, you've got to think about the stock market that's averaged maybe 8, 10% a year. Um, and if you can get two of those opportunities in a year and put even a good portion of capital into that, I mean, that's huge.
Yeah.
So I think versus, people are thinking I'm going to make 10,000% when it takes off and, the government's all in trouble, versus you look back over the last 10 years, and I've got a chart, say, you going back into the 80s. I think from about 1985. It's barely above where it was in 1985 right now. But
Yeah.
you've had all these opportunities to make 20, 30%, and sometimes more over and over again. Kind of on the low end is 10%.
Yeah.
And but again, for somebody coming into this, when you get kind of all excited about it, those kind of numbers can think, well, I don't need that kind of chump change. But when you compound it, it's quite substantial.
It's a lot of money. Yeah. No, I would agree. Parting thoughts, anything that you would like to share going over the next, that you expect to happen over the next several weeks or a couple of months?
Well, I would just, I came up with this phrase, TMOY, TMOY, the mellowization of you, and for investors. And just, this is just a time where not too much expectation should be had. Gold is looking, it's really holding in pretty solid here. Um, it's a light buy, and something could happen that ignites it from here. Um, but I just, I think if you look at the Asian mindset, I mean, these people have been around for thousands of years. People in India aren't running in to dump their gold because it's down here. They're not worried that it doesn't pay any interest, and in a lot of dealers in India do pay interest on gold, but it's just not a big buy zone. But I mean, they'll put in the news that India's demand is down because the price is up. Yeah, but their core positions, they're pretty happy. Like, you get up to $2,000 and, especially in rupee terms, your gold is, another year of tremendous increase in purchasing power. So I think, it's a time to count our blessings. We're not far off at 2000. It's well supported here. And there's, a number of trading opportunities to keep, people in action busy.
Got it. Okay, if somebody wants to get in touch with you, tell us about your services and how would they get in touch with you?
Yeah, so I edit some different newsletters, and I've run I guess four. I got a dividends newsletter, a juniors newsletter, a swing trade newsletter, and then my main newsletter, which, generally most people start with that, which is Galactic Updates. And you could email me at Stewart at galacticupdates.com, or check the website galacticupdates.com, and you can get a hold of me from there. Definitely appreciate it.
Got it. All right. Well, I want to thank you so much for your time, Stuart, and we'd love to have you again here in the next several weeks or few months.
Thank you, sir.
Yeah.